All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for another market bias update report for the week of Sunday, December 8th. First off, recording last week's trading, ended up having 14 trades with 8 wins and 6 losses. You can see the futures trading here. Also ended up having $1,000 worth of trading in options and stocks, but the total for the week was 26,869. So another banner trading week this week. A lot of that was due to, you guessed it, trading Bitcoin futures. That is my cash cow and has been for the last several months, ever since ETFs got released, and have been doing quite a bit of it. And so you can see here for the week, gained $26,869. Diving right into looking at the charts. On the S&P, last week I was saying I was thinking that we needed some time off, that I was going to be surprised if we pushed higher. We did end up going slightly higher one day on Monday, but then ended up basically just going neutral, didn't go anywhere. And I would not be surprised, and maybe this is just my own personal bias that we are overextended, but I would not be surprised to see prices push back down into the 6,000 layer. If not even maybe slightly below it. I do think that the market has gotten over its skis and needs to take a breather. So looking for prices to chill out a little bit on the S&P. Going out to the Nasdaq, basically exact same read, overextended on the RSI. The MACD is signaling bullish territory, but it's starting to flatten out its pace. This is a momentum indicator. So you can see the momentum was high earlier in the week and then stalled out. Doesn't surprise me looking at this to think that we might have a little bit of consolidation and or pullback. Going out to the Russell, we ended up having that consolidation and pullback in the small caps of the marketplace. Couldn't break out of that 2460 level. Ended up coming down and testing our 20 SMA. And now we are just kind of chilling there. For this, I would probably assume that we are either going to be stuck in a range of 2380 up to that 2460, or if we do break the 20 SMA and close below it, I would not be shocked to see us come back down into the 2325 level. Going out to the Dow Jones, we are showing a little bit of relative weakness here associated with the, or compared to the S&P and NASDAQ. Did roll over Wednesday, Thursday, Friday, and looks to me like we're coming back down to test the 20 at around 44,340. I am guessing that is going to break, and we are going to be looking at the rising 50-period SMA as support. This is confirmed also with kind of a double top on the MACD. And also, even though we did set a new high on the RSI relative to our line here that was for divergence, we got a little bit of a bump above that and then failed. And now it looks like it's starting to try to roll over here again, trying to set a new divergent pattern on the RSI. So expecting some selling pressure here coming into the week ahead. Going out to Bitcoin, we are pressing right up into that 100,000 to 103,000 zone that we've been trying to break out of for the last couple of weeks. I do think this needs a little bit more time. I would not be surprised to see it just hover in the high 90s, somewhere between 95 and 100,000 for the next several days. Eventually, I do see this resolving to the upside, but I don't think we are quite ready yet. Best trigger for this is probably going to be going above today's high, which was just over 102,000. Going out to Ethereum, it actually had relative strength compared to Bitcoin and the rest of the market. Blasted off Monday, Tuesday, Wednesday, Thursday. Ended up opening here Sunday with a little bit of hesitation. Again, wouldn't be surprised to see this pull back into around 3760. Going out to gold. Gold is struggling. And on the daily chart here, if I remove these drawings, you could say a breakout above 2,700 is a go for the bulls. I would want a little bit more confirmation. I would actually want it to take out the highs here around 2725. And the reason for that is going out to a weekly chart. If we toss this out to a weekly chart and look at it, this kind of confirms slowing momentum. You can see that our 9 EMA, this green line, which is our momentum moving average, has flattened out and lost that steep angle that we have when we are in momentum conditions. And if we go back to the daily chart here and zoom in again, this to me looks like a potential head and shoulders where we'd have the left shoulder here, the head, and then a right shoulder. And if it breaks basically that diagonal line here, that would be a longer term sell signal. If that does occur on the daily chart, I would expect it to come back down to around 2400. We still have a little bit of support here acting both on the daily and weekly from 2600 to 2630. So we'll have to see how it handles the support zone there. And again, the resistance zone up at about 2700. So depending on which way that breaks, that will inform my bias for the rest of the week. But I am seeing a little bit of weakness here in the chart, and it's having a hard time reclaiming this all-important 50-period SMA that is on top of it right now. If it does get back above that and claims that with good volume, I will play it bullishly again, but otherwise it is a stay away and looking for further price discovery. Going out to silver. Silver is in an interesting spot. I actually am more interested in silver if it breaks out of this range and moves higher. Let's call that above 32.10. If it gets above $32.10, I will be interested in playing that to the upside, but I will want confirmation on gold as well because they usually do trade in tandem. That said, it doesn't look great right now, and we are seeing depreciating values on the RSI, signaling divergence as well. So wanting a little bit more price discovery on that to see which way it wants to go. Going out to copper, it is choppy, pressing right into our diagonal resistance line. But even if it breaks out of that diagonal resistance, we have both the 50 and the 200 on the daily chart above it, and the 50 just crossed below the 200, which is not a great look. This needs more development before I'll be interested in playing it at all. Going out to Palladium, basically rinse and repeat, exact same thing that I just said on copper. It is now below its 200 period moving average and its 50, also below the 9 and 20. This has a lot of work to do for the bulls. I would be more interested in shorting here potentially than I would be going to the top side. Going out to platinum, rinse and repeat, exact same thing. Gonna skip on over it, but more interested in potentially shorting this than I am going long. Going out to crude light, this story needs to be told on longer time frames. If we go out to the weekly chart, get rid of our drawings there and zoom in a little bit, we have now officially gotten not only underneath the 200 period moving average on the weekly, we've had the 50 period moving average cross below that on the weekly, which is not a good look. And we are pushing down into the support of $65 per barrel, which if that breaks is kind of a lookout below scenario. If you put this out on a monthly chart, you can see we're also below all of our moving averages on the monthly chart. The MACD is bearish. The RSI is also in bearish territory. And really, if this zone breaks, we would potentially be looking at going all the way back down to probably $45 before any real support level would form. So this is a potential short area of the market, not going long at all anytime soon on crude light. Finally, last but not least, for our futures, looking at natural gas. I don't particularly like the look of this. It did technically confirm a pivot here that would be a higher pivot low in our series, moving higher. We also had a higher pivot high preceding that. So the bullish uptrend is still intact, but I don't particularly like the look of this. One, based on the gap up and then immediate sell down here after the weekend, and also just looking at the MACD and the RSI and the relative highs on that tell me that this might need some time to chill and is likely not going to turn around and just run this week. So I'm staying away from natural gas, even though this was technically a bullish retracement confirmation. Going out to UUP, it is threatening to roll over slightly, which is great. It would be really, really supportive for the market to see this chill out, pull back down into the 2950 area, and maybe give a low base there and break lower from there. That would be ideal because lower dollar prices would help US equities. But I'm not holding my breath for that. The US dollar has been incredibly, incredibly strong the last few months, and I'm not anticipating a huge sell-off here, but I would like to see a little bit of a retracement still here, come back down into the 29.5, and then reassess when we get down to that level. Last but not least, let's go out and look at our heat map. Heat map, this is a 1 week performance from last week. You can see a lot of selling came into most of the market. The only places that were spared were really the technology area, uh, communication services, and consumer cyclical. Basically, the rest of the market did end up selling off decently this last week, and I'm expecting that probably to continue this next week as well. Going out to our economic calendar, you can see here Monday and Tuesday, the 9th and 10th, there is no important economic data coming out that should move the market one way or the other. Wednesday, we do have core CPI data, which will be very important to the market. And then also on Thursday, December 12th, we have core PPI data and unemployment claims. So know that on Wednesday and Thursday, we do have a couple of reports coming out. Both of those will be pre-market trading, opening or being released at 5:30 before the opening bell. So by the time everyone is actually up and at their computers looking at the market, this will already be a known event at that point. And then wrapping up, looking out to our Fed rate decisions. This is a probability analysis for what the Fed might do with overall rates coming into the December 18th meeting. Right now, it is expected with a 16% probability of holding rates as is and an 83% chance of a 25 basis point cut. Anyways, with that, guys, take care, trade safe. As always, let me know if you have any questions. Please hit the like and subscribe if this is helpful to you in pointing out areas of the market that might be beneficial for you to trade, and I will catch you next week.